Thank you for tuning in to the Brach Eichler Talks podcast, where we explore and discuss today's trending legal topics. In this episode, we will discuss a recent tax alert titled IRS CP261 Reminder, Subchapter S Salary and Payroll Tax Requirements. One of the popular entity choices for individuals starting a new business, especially in the healthcare field, is the Subchapter S Corporation, or S Corp. It provides personal liability protection, other than malpractice of the shareholder, professional, and employees under his or her supervision, and pass-through income tax treatment for owners while allowing those owners to potentially reduce self-employment taxes through salary/distribution splits. Since salary is subject to employment taxes and distributions are not, shareholders, especially those providing services to the entity, may be tempted to underpay or pay no salary to themselves at all. Unfortunately for taxpayers, S Corps must pay reasonable compensation, a position that has been sustained in numerous cases, which can be found on the IRS website. Procedurally, the taxpayer affects the Subchapter S election by filing a Form 2553 with the Internal Revenue Service. The IRS will acknowledge the approval by sending the taxpayer a CP261 Notice. In late 2023, the IRS revised the notice by adding the following language on page 2 under the Keep in Mind section. Payments to shareholder employees for services rendered. You must determine a reasonable salary when a shareholder employee of an S corporation provides services to the corporation. Payments to a shareholder employee for services provided to an S corporation are wages and are subject to employment taxes. We may recharacterize distributions paid to a shareholder as if the distribution was paid in lieu of reasonable compensation. Revenue Ruling 74-44. In addition, the notice also touches on the need to track stock and debt basis. If you are contemplating the formation of a new business entity or are currently an employee owner of a Subchapter S Corporation, do not hesitate to contact David Ritter, Stuart Gladstone, Bob Kosicki, or Cheryl Ritter for guidance in dealing with the nuances of the operation. The need to pay a reasonable salary to the owner-employee is but one. For more information or assistance, please contact David J. Ritter, Esquire, Member and Chair Tax Practice at 973-403-3117 or dritter@bracheichler.com. Or Stuart M. Gladstone, Esquire, Member Tax Practice at 973-403-3109 or sgladstone@bracheichler.com. Or Robert A. Kosicki, Esquire, Counsel Tax Practice at 973-403-3122 or rkosicki@bracheichler.com. Or Cheryl L. Ritter, Esquire, Counsel Tax Practice at 973-364-8307 or critter@bracheichler.com. Don't forget to subscribe to our podcast on Spotify, Apple Podcasts, and YouTube. Follow us on LinkedIn and Facebook for updates on new episodes. For more information and resources, visit bracheichler.com. This is intended to provide general information, not legal advice. Please contact the authors if you need specific legal advice. Brach Eichler LLC is a full-service law firm based in Roseland, New Jersey with over 80 attorneys. The firm is focused on the following practice areas: healthcare law, real estate, litigation, trusts and estates, business transactions and financial services, personal injury, criminal defense and government investigations, labor and employment, environmental and land use, family law services, patent, intellectual property, and information technology, real estate tax appeals, tax and cannabis law.